Hi, welcome to Tax Tip of the Week. Today we're talking about the Global Reporting Initiative, GRI Standard 207. And with me I have Helena Barton, responsible for our sustainability, audit and advisory services, and also involved in the Global Reporting Initiative, where she chairs the Independent Appointments Committee. Helena, tell us about the GRIs and the new standard.
Thank you, Jonas. Yeah, let's talk about tax, specifically this new reporting standard from GRI that is actually looking set to be the most downloaded of all GRI standards of all time. So clearly there's a great interest in tax reporting, not just from heads of sustainability at companies, but also from CFOs, tax accountants, tax advisors, lawyers, and so on. GRI issued this tax standard number 207 in 2019, and it is effective as of January 2021. So this is the new global standard for public reporting on tax, and many companies, global investors, civil society groups, labor organizations, they've all signaled their backing for the tax standard because it's going to help address growing demands for tax transparency. And so, it really supports public disclosure of a company's business activities and tax payments on a country-by-country basis.
And Helena, if we're looking at the GRI standard, what is the key features then of Standard 207?
So essentially, the standard is asking organizations to report on a combination of their management approach and the country-by-country reporting so that they give greater insight into their tax practices across different jurisdictions. So when you report to that standard, you will firstly give a narrative explanation of how you as an organization manage tax, so your approach to tax governance, controls, risk management, but also you'll be reporting country by country on the financial, economic, tax-related information for each jurisdiction in which you operate.
Got it. So why is there such a growing interest in getting organizations to publicly report on tax?
Yeah, we're really seeing an increasing demand for companies to show greater transparency and accountability around their business operations and their contribution to the societies where they operate. So it really speaks in many ways to their social license to operate. And actually many companies themselves, they're voluntarily looking at how can they respond to that? How can they show their socioeconomic contribution that they make locally, the community contribution, you could say, and how can they promote confidence in the tax practices of their organization, other organizations, and so on. And it's really about confidence and credibility. And, by doing that, they're going to help all of us make more informed judgments about a company's tax practices. So there's really good reasons at the company level or organization level where it's becoming, a fundamental part of corporate sustainability strategy. But actually, as a society, we know taxes play a really vital role for local socioeconomic development. And at a global level, they are, of course, critical for achieving the UN Sustainable Development Goals. But also, finally, at the EU level, tax policy is right now evolving to create a more transparent and sustainable environment for businesses in the EU. And we're looking at new tax transparency obligations. So the standard, you could say, it's voluntary, best practice, but with all of these legislative measures underway in many countries around tax transparency, it might be a good idea to get ahead of that with voluntary disclosure using the GRI Standard 207.
Thank you, Helena. So it's good to anticipate and adapt to these developments and really make sure your organization masters tax policy, tax governance, and tax communication. Anyone can download the GRI Tax Standard 207 free of charge on GRI's website, globalreporting.org. Thank you for tuning in to this Tax Tip of the Week. We look forward to serve you the next tip next week. Thank you.